Good morning, Keith. I've been waiting to go long China, so thanks for the green light. That said, can you summarize what your models show today with regards to policy, political risks in China? Thank you. And obviously, one thing you've talked about for a long time is that markets or models, which are market-oriented, front-run policy and political risks.
Yep.
And, aside from front-running, we've also seen the Chinese easing, and sometimes somewhat substantially versus the rest of the world. But
yeah, I mean, China is the only country in the world, major country, that is easing.
Yeah.
I mean, Japan is, I guess you can call that easing. It's literally yield curve control. But they're easing. They've devalued their currency a little bit, which is more than not. They're obviously stimulating, and the rate of change data is accelerating. That's it. We already reviewed that last week. Reviewed the tapes. Yeah. As the data gets reported, we've been talking about Chinese economic data going from horrendous to less bad, right? So I really want us to spend time on what's happening today and what's happening tomorrow's data instead of going through the macro show and saying, hey, remember that industrial production number in China went from negative to positive 0.9? It's still in my head. It's still there, but we don't really need to go through that. Like, we don't need to every day make you feel more confident, right? Like, that's not what my goal is. My goal isn't like, he sounds really bullish on China. If he sounds more bullish, I'm going to get more bullish, right? That's not the way it is. Eric Genron, who's been running the macro show for a long time, he said, Keith, this morning, every question is, are you doing what you said you're doing? Right? I'm not being as I know some of you get a little tense when I get a little critical. That's not what we're trying to achieve here, right? We've been talking about China and walking into this position for a while. It doesn't have any feelings associated with it. In fact, if tomorrow's Chinese data is a decel, it gets a little bit more difficult. Yep. And guess what? The Chinese stocks could go to the low end of the range, and then it might get more difficult. But it won't, for me. We're in it right now, and until we're not, we're doing what the model's doing, okay? We're doing what the model's doing. And to Jonesy's point, on the GIP model, that's why we call it the growth inflation policy model, that is what it is. GIP. These two things front run this, right? So this G and the I, again, growth and inflation data had been terrible for a long time. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.